before we jump straight into the charts and what we're looking at there, we need to talk about the fundamental viewpoints of what we're looking at here on the market. PCE, PPI, and CPI, those have all performed terrible. And if anything, we've seen a resurgence of some of these numbers to the upside. Now, does inflation show its entrenched yet? That's the question, but that's what we're going to be discussing here on the day, as well as the key levels on the chart and where to be looking at as far as looking to trade this week specifically. So let's not waste any time. Let's get to it. Now, when we jump into the charts, the first thing I want to say, and we've been discussing it for the past few days, is the 200 SMA is ultimately where we're going. And if you're not following on Twitter, it's all posted on Twitter so you can see all these charts and you can have them saved for yourself. But we've been pushing down towards this 200 SMA. We have a little bit of support down here around 11.8, 11.9, and that's where we've been watching. Because if we can flip this area and we can turn this into a lower low, so we can break this level and get a lower low established, I think you flip back down to the concerns of possibly making new lows very soon. Fundamentals set aside. That's ignoring the fundamentals. That's just looking where we're at with there. Now, when we take a step further and we look at these fundamentals and things we need to look at, I think you're on the case of major concern and turmoil on the markets. And then that's what we really need to be talking about. Now, before we jump directly into that, I have to ask you to do two things. Consider liking, consider subscribing. Every single day I'm making content for you so you're prepared and with how we're moving on the market, and you can have an unbiased sense of news, fundamentals, technicals, and everything in between when you're looking at what's happening here. Now, going into PCE, we expected bad data. We expected bad CPI since PPI had performed so terrible, and we've seen the drop in demand, happening so far, but unemployment has stayed, very, very low. All the data suggested what was going to happen, and thank God, things played out really well. But now we're also posting educational content every Saturday here on the channel as well. But again, consider liking, consider subscribing. Let's get back to it. Now, what I want to talk about here today, really quick, and Sundays, they're a little bit different than most of my videos. Typically, we go over the charts, we go over plays I like, but Sundays, I like to do a little bit of a broader breakdown so you can kind of understand some of the fundamentals as well. So I'm going to try to do this pretty quick today, but let's get to it. So, previously we had all this mess we were talking about. Now, what's been carrying this market if we consider it, okay? Let's talk about what's been good for the market. And I use this rainbow color because that's a sign that things are looking really good. And I think if you think things look great in the market right now, you're a little bit delusional and you believe in rainbows. So if we look over the past, 3 months, PPI had been performing well, CPI had been performing well, PCE had been performing well. Now, the question mark was unemployment. And we had listened to the Fed, and that's again why I say this. We can take this data, and the data is not necessarily giving us the big drops that we've seen previously, and I'll explain why here in a second. But we have to take what the data is given to us, and then we have to interpret what we think the Fed's going to say from this, because ultimately the Fed's going to move everything. So if PPI comes out bad, but the Fed says, oh, we're not concerned, we're going to stay on the same plan, we're going to stay at 0.25, we look to pause by summer, then you're not going to see that big of a negative effect on the market, okay? My opinion, okay? So just take it for what you will. Now, as we've gotten PPI, CPI, and PCE, I have to assume that the Fed's going to change their tone based on what the Fed has said. They've said unless data comes out bad again or starts to have a resurgence of inflation, then we will stick to the plan. The only person who hasn't spoke yet has been Powell, and we've definitely heard the tone switch pretty broadly from everyone. So that leads me to my next statement, unemployment. And you have to assume we have to disconnect unemployment from being good. Now, again, the Fed has tried to maintain this thesis that unemployment has to go down. It has to start, trickling to the downside. Okay. But they have said that if PPI and CPI and PCE and these inflation data are dropping, then it's good that unemployment stays where it is because it shows the market's resilient. And I'm just like, are we delusional? Because we've gone over all the data, we've broken on each CPI, PPI report, and we can see inside there that the only real data that's dropping from inflation is energy prices. Goods aren't dropping, groceries aren't dropping, price of living, cost of living isn't dropping, rents aren't dropping. They're just going to resurge. They typically drop during November through January. That's typically the worst time of the year for landlords, sorry, I couldn't get it out of my tongue, or any type of, rentals in the market, multifamily specifically, right? That's why rents usually drop during the December months. You can go find specials if you're looking at an apartment or a condo or anything like that during those typical months. Now, when we look at this, I've stayed on the same track of this is not sustainable, that we cannot continue to drop 0.5% on PPI and CPI. It's not sustainable. It's never happened and never will, especially with what's happening with our wage growth and unemployment. And so that's why I think unemployment is really the underlier here. Once unemployment starts to actually drop, I think that's where you start to get a hard, maybe bottom on the market. Maybe you get some downside why unemployment is going up. Sorry, I get them, confused a little bit on the up and downside there, but overall we want unemployment to go up. We want people to lose jobs because that will actually help data start to drop as far as inflation. I know it sounds terrible, but that's just the process and the way it works. You have to stop spending money in order for prices to go back down to normal, and that's what's happening there. So I think unemployment is the number one factor we need to be watching. I think unemployment will directly correlate with PCE, CPI, and PPI. Again, that's my opinion. Now, the next thing is what happened on Friday. Friday, we saw something very interesting. We saw this happen. We saw Fed Fund futures price in 5.5 rate hikes. So basically right now we're at 4.75, and giving you a viewpoint of what's happened. We basically have been pumping up these rates, pumping, and then we started lowering to 50, then 25, and hopefully 25 again. And while inflation is dropping down right now, right? So from PPI, CPI, PCE, that's what we've been watching there. That's what we've been focused on, okay? And that's what this chart kind of represents. And again, a little bit delusion because it's been dropping pretty rapidly, pretty fast. But what have we seen over the past month, 2 months based on the revisions? A sharp incline, very sharp. It's been pretty interesting what's happening. And this leads me back into concerns. And again, now that we have the bad data coming in, what is the next step if you're a bear, or the next step if you're looking at downside on the market? It's listening to Powell's tone. I think that's the last thing you need to hear right now, and that's what's going to give you the overall real direction in the market. But let's go back to the charts and let's take a little bit of a visual here. Now, what I want to do really quick is go back to something like the daily chart real quick for you. Now, what I will say is that you're clearly not back down into your bear trend. Okay, so we want to point this out here right now. You can see clearly this was your trend. You were clearly trending down on the Nasdaq, right? You've obviously broken above that. You're still above the 200 daily SMA. Okay, this is the weekly, I'm sorry. But if we go to something like the 4 hour, and I can bring up the daily so you can see, you're still right above it. You're mounted on top. You're still well above that trend. So you don't necessarily look terrible. I want to say that right now. It's not, it's not the worst yet. Okay, so let's make sure we clarify that. So for anyone saying, oh, you're back down in the trend, no, you're not. You're not there yet. But if you make a lower low below 11.85, 11.9, I'm not gonna lie. I'm gonna flip my tone pretty tough and say, man, it looks really bad. It looks like you're gonna start pushing down pretty aggressively. Now, when we go over to something like ES, it gives you a little bit of a better visual. And if we look at ES, I would argue that Nasdaq and ES are more aligned than they have been in a while. I would say in probably the last 4 months. Previously, going into December, we were heavily being carried by the S&P and Dow. The Nasdaq was definitely lagging behind. And if you need a visual of that, something like the Big Six gives you the best representation. And this is just looking at some of the biggest equities in the market here. Let me actually get rid of this. I have no idea why this is so white. Dear God, it's so bright. So if you look at the Big Six really quick, giving you a visual, and all this is the top 6 equities that I'm watching in tech: Apple, Amazon, Tesla, Google, Nvidia, Microsoft, right? And if we go back and look what happened from some of these months. So if we go back from October into December, when you had that rally on the S&P, you didn't really get a rally from tech, okay? But when we had this rally from the Nasdaq, you obviously had a massive rally on tech. You went from very big lows up to highs of around 1,070. Huge rally there. So really nice. That's the difference of when you're led by the Nasdaq and being led by the Dow and the S&P. You want to be led by the Nasdaq to really get momentum to the upside, okay? That's why I always say, and that's why I always highlight the Nasdaq and what's happening there. So that's where we're at. Now, When we look here, I think you're getting more aligned. And I think ES is dangerously close to getting back inside of this, trend. Very, very, very close. Now, ES, what we're looking at here, what I would recommend that you watch on your chart. Now, again, you're still at these daily 200 SMAs on everything across the board. If you start flipping below these, you need to flip and look at your weekly 200 SMA. That's going to be your next big level to watch. But I do think you're inclined for some danger here. And again, I can only say it so much. The biggest factor is going to be the next time Powell comes out and speaks, because Powell is going to give you exactly what you need to hear. Right now, I believe there's extreme uncertainty. And I want to highlight something else right here, that Fed fund futures are at 5.5. So basically that's pricing in 3 more 0.25 hikes, which isn't detrimental to the market right now. But they're saying, and there's been a few studies that have been released. Again, we've covered those already here on the channel. That's saying that we need to raise this all the way to 6.5. Now that would be pretty catastrophic, and I wouldn't rule it out, but these are like some pretty wild statements that are being made out there. But the point is that nothing is impacting inflation directly as far as goods, services, and everything in between. The only thing that's really getting affected is energy, which has no real affect by what the Fed is doing. Energy is affected by everything else, right? So we need to identify and acknowledge that. So again, that's why I solely believe unemployment and Powell are going to be your biggest factors in the upcoming days and weeks. Now, when we go over the Federal Reserve and a few things they're talking about here, again, I'm going to tell you right now, this week, it's not the most interesting. There's not that much going on here. Last week was definitely one of those weeks we had to watch. We had GDP and PCE. We knew those were going to be the biggest factors going into the week. Monday, not too much. Core durable goods. It'll be minuscule, not too big. I think housing will also be important. Housing has set a little bit of a tone in a precedent, but nothing beyond that. Some of these Fed members are speaking, but again, we want to hear the head honchos. We want to hear more Bullard. We want to hear more Powell. We want to hear the big guys, right? Those are who we want to hear. We want to hear the voting Fed members, okay? Google the list if you need to hear or see who those guys are and women, right? So you have a little bit more, but nothing extremely big here. Consumer confidence, these aren't going to be the big market movers, right? These aren't the real focus when it comes to news. So again, investing.com is where you can look at this and get a better view. Manufacturing PMI, again, this is almost like a give and take here. We've seen manufacturing PMI drop. We've seen it rise, and it goes both ways, because when it drops, yes, that's good that demand is dropping, but we're not seeing it reflect back into what's happening with inflation numbers. Because if manufacturing is dropping, typically we see inflation numbers start to drop, but we're not. And so it just means that demand has lowering, which means companies are going to be making less money, but the price of everything still is remaining very high. And that is, it's kind of an anomaly if we've been really looking at what's been happening here. So that's why I continue to side with this downside thesis and my longer term viewpoints. Short term, yeah, I will pivot back and forth with how we're moving, but overall, you still have to be looking at what's happening based on this data. Initial jobless claims on Thursday, probably the most important in my opinion, because we need to see what's happening with jobs, and they only continue to go down, right? So not something we want to see. We can continue going through. Friday, we have non-manufacturing employment. Employment is the only real thing on the book this week, okay? Bostic, that will be pretty important. Let's hear what he has to say, but that's not until Friday either way. So unless there's some surprise Fed meetings, which I'll mention on Twitter or mention in any updated YouTube videos, there's not much. Okay, so a lot of people are saying, we're gonna bounce back, we're this, we're gonna that. Okay, I'm just sticking to what I'm saying here. Okay, we've hit some pretty gnarly levels, and if we really look at what's happened, I want to give you a visual on this chart. Okay, so really quick, I want to go back to the Nasdaq, and I just don't know how to do this on TrendSpider, or I would. Giving you a visual on the Nasdaq, let's just talk about what's happened. And this is something super, super simple you can do for yourself. And I always recommend people do this when they're new to trading, or they're trying to learn, price action, supply and demand, anything like this. Now, this is just going to just highlight the overall trend. What I want you to do is from the start of this trend, and we were doing this on the way up, just highlight all these local highs. Just begin to highlight your local highs here before you get a little bit of a pullback. Let's just go real quick. There's a few of them you could probably get rid of, but ultimately we're just gonna do this really quick just for time's sake, right? Like you can just see where we're at. And we want to argue that maybe you have one here because you consolidate, but we'll see. I want you to just recognize something. When we're really looking here at this chart, look what happens. And you're going to notice something here in a second. What happens? Previous high, you mount. Previous high, you mount, you mount. Previous high, you mount, you push up, you push back down, but you just mount that previous level there, and then you make a new high. And then you get a little bit of a trap right there. I mean, it's just over and over and over. You're just bouncing, breaking through, bouncing. I mean, let's look at what's happening, okay? And so that's where we're at now. And that was all the way to the top. It was some of the clearest price action structure. It was some of the easiest money made. Go back, watch the videos if you need to. Again, I recommend that you guys don't trust anything that you hear on the internet or on YouTube specifically about stocks. I think you're an idiot if you just blindly believe anybody. But I think you should go back and like watch some content and learn for yourself. Now, what I want to do really quick is show you this chart inverted right now. And so I should show you, and basically it's the same chart, except, you know, if we're going up, that means the Nasdaq is going down, but it gives you a little bit of a better visual. Now, let me just humor me with what's happening. All we wanted to see to start turning back to bearish, and everyone was like, Tyler, you're overly bullish. I'm like, look, you got to be bullish until the trend changes, right? And so if we look here, let's begin to talk, right? So we have some swing highs, but we're going to mark these real quick, okay? That's all we're going to do, all we're going to mark, okay? We're just going to keep coming in here. And you start to do very similar things, okay? Now, I can agree that during this time period from February 5th into basically February 15th, it was pretty choppy. That's why I had not flipped bearish yet. You can go watch when I really started betting on the downside again. But you can see what happened here. So you have swing highs, and then it gets aggressive based on data releases. And you start pushing up. So you mount previous level there, you reject, push back up, you mount, reject here, you mount here, and you're pushing back again. It's the same structure, just inverted. It's the same type of price action. And you're seeing all the aggression flip from the bull side to the bear side now. And that is extremely, extremely concerning when we're looking at this as a whole. And then we go into Yahoo Finance really quick, and we just get a visual of what's happening with some of this volume in here as well. Now, needless to say, if we look at the last 2 days of trading on ES, Nasdaq, whatever you want to look at, I don't care. Okay, we're looking at whatever you want to look at. When we come into these daily candles, and I want to just highlight what's happening here, you're getting your most volume that you've had in a while. Now you're getting your push down here from 4,000 and then down into your 200 SMA. Now I would say 4,000 on the chart and your 200 SMA are probably some of your biggest levels other than like 4,100. Okay. 4,100 was on the 16th. So keep that in mind. So we look back at these days. So you're coming into a monster level, and guess what happens? You get increased volume. Now, typically what we would look for is increased volume to signal a pivot in the opposite direction or to get a bounce. But look what's happening here. Sellers are absorbing all of that buying pressure and trying to keep you down. And this has to be the concern here. Now, again, I am not saying that you have to drop going into this week. I'm not saying that because you're still at a massive level. We've hit our targets to 200. That's been our target for like literally the past 2 weeks, right? Of getting a pullback. But the concern is the strength that's tied to this move now. I am not confident that this is a bounce. I believe right now that sellers are showing the most strength that they've shown possibly since I want to say even past December. I don't even believe December's move down was that strong because it wasn't based on that much volume. And that's what has me so excited right now when we look at this for the downside thesis is since you had your bad report and since Bullard came out, I believe on the 15th, you've seen really increased volume. No, it wasn't the 15th. Maybe it was the 15th. I'm not exactly sure. But we've seen increased volume, 89 mil, 82, 83, 96, 108. Increasing and stair-stepping from sellers. And this is what you wanted to see. You finally have got it. And again, you can go all the way back. This is the most volume that you've had going all the way back to December 14th. Or, sorry, December 16th. So that's when we look at this, I'm like, man, you're finally seeing some of that pressure, and the proof is in the tape there. So that's what we need to be watching. That's what we need to be prepared for. Now, again, what am I looking for this week? If we flip below the 200 SMA here on ES, where am I looking for us to go? And probably not a question a lot of you guys want to ask. So if we're looking at the downside, I think you're coming into your next demand level, which is going to be all the way down here, roughly 39.26 down to 3900. Breaking below there, I think you're almost, guaranteeing that you're you're flipping into the possibility of testing new lows. At that point, if you start to break below 3,900, you get very, very, very bearish, and you have to start getting excited for the downside there. Going into the Nasdaq, where we're looking at, we have a little bit of support here at 11.8, 11.9. That's been the line in the sand for weeks, and then after that, I think you have to be expecting a test back down to 11.4, roughly. That's been a monster level across the board. That'd be my next monster level. So we have some levels in between here, and I'll keep those posted on Twitter and in the daily video tomorrow. But for right now, these are my really big levels. I'm trying to give you something to look forward to on a long scheme and have targets and have an overall trade plan. Now, if we start to bounce, I'm just looking for us to start making higher highs. That's all I want to see. I want to see us get back above 12.25, get back above 12.4. It's a slow, steady climb back. I don't see us just rocketing back up yet. That would have to take a Fed member coming out and signifying that this was all just, not really relevant, which I don't think it happened, but we'd have to wait and see. And then on top of that, what's happening with China, Russia, and it's all right now a perfect storm. That's why I continue to say, fundamentally, I don't think I've been this bearish this entire time. Okay, people keep saying like all time, like obviously no, like the housing bubble was terrible, the dot-com bubble was terrible, 1970 was terrible. Look at those economics, but I'm saying during this time, right, during the lifespan of the YouTube channel, I don't think I've been this bearish on the market fundamentally with how we're standing right now, because where we're at is at such an inflection point of inflation and possibly becoming entrenched in the wage price spiral that we haven't had to look at this in a long time. And there's a lot of risk when we look at this market based on how steady and how resilient inflation has been.